The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading. Now, we get a big week of earnings. Big week of earnings tomorrow. They kick it off with some of the tech companies. We get a Fed decision tomorrow as well. Boy, you talk about the overnight action in silver. We'll get into it in a moment, but we got the S&Ps right back near 7,000. S&Ps up by 15 points, 0.2%, trading at 69.96 right now. NASDAQ 100, we're up by 0.6%, 26,002 points, up 153 on the session. Dow in the red right now, off 0.6%, 335 points, 49,229, and the Russell slightly in the red as well by 1 point. But the Russell's given up about 12 points in the last few hours of trading. Bitcoin, struggling to find a bid for Bitcoin. 87,915 right now. We jump over to crude. A little spike in the recent action to 61.86. You got higher prices right now for a barrel of crude. You jump over to yields. Now we got a Fed decision tomorrow. As I mentioned, you get the 10-year right now. Negative by 5 ticks. You got a little bit of higher yield. The 10-year approaching 4.24. Okay, 4.24. You got some action in the dollar this morning, and it is weakness yet again, folks. Okay, we're coming down to the lows of September and the lows of July. Those lows, July, you're talking about 96.37, and in September, 96.21. We just hit a low of 96.54. I mean, check it out. In the last 8 days, did you hear that? In the last 8 days, the dollar has lost 3 full points. That is a remarkable move. On a weekly basis, it was a remarkable move last week, and you are continuing lower today. We'll see how that plays out. In a weak dollar, you jump over to gold right now. We put it back to a 15-minute. You see the escalation. Last night, you come to lows right after the close, 49.81. You accelerate higher. We're back to where we were. Basically in the middle of the day yesterday. Gold off $18 on the session, but trading well above $5,064. How about the volatility on silver? Silver, folks, was down almost $16 from 1 o'clock in the afternoon until 4:30 last night. Now we're up $10 from where we were right then. We put the silver on a daily. That was a remarkable feat of volume. Now, technically, you finished higher on the session yesterday. Okay, it's a red bar, but you closed out Friday session at 103.26. You closed out yesterday's session at 103.89. You had a high on Friday of 103.53, and you closed out at 103.89 yesterday. But folks, you made it up to 117. We closed out at 103, and you had more volume than almost silver's ever seen. Yesterday on a daily basis, 312,000 contracts. That's more than most of the volume you're doing on a weekly basis going back. Look at this. You don't even have to go back to 2024. Okay, in May of this year, 250,000. All over the place. 280 in June. 255 in August. Remarkable daily volume. It's Tuesday. Look at the volume we already have on this bar. Now, on a weekly basis, you are higher. Okay? But it's Tuesday morning. We'll see how it plays out. Last night, just an indication of the risk in that market. Listen, doesn't mean that it can't be a trader's best friend when you're talking about extreme volatility, okay, and silver dropping $17 in a matter of a few hours. But you better believe when you're putting, I talked about yesterday for the first time, I was looking at potentially a short. You can make that short, okay, but just like we're talking about silver can drop $17 in a few hours, it can go up $17 in a few hours right now too. That's the type of volatility you're dealing with when the market's disoriented and you're getting those types of swings which are not grounded in the long-term fundamentals of a commodity. So keep those spikes up. But yeah, silver continuing to push higher this morning. We jump over to platinum. Talk about some volatility in platinum yesterday as well. Platinum trades from $29.25 down to $24 25.49, I think was the low. Yeah, 25.49, almost a $400 pullback in platinum. Now, platinum has not caught the same bid. Platinum's down 8% right now, off $227. Jump over to copper, down about 12 pennies at 5.89, and you jump over to natural gas. Backing off from the highs of yesterday, 7.43. Boy, you talk about this natural gas, man. From $3 up to 7.39, 7.43, excuse me, and we're backing off a bit. All right, we jump around to some companies with earnings, and we got GM out with their numbers. Up by about $3, GM. And yeah, we jump over the headline. How about profits growing $2 billion? That's the headline, and there it is. And they're planning buybacks, and the market likes it. Yeah, profits are going to grow as much as $2 billion this year. Adjusted earnings before interest and taxes, $13 to $15 billion, which is higher than last year's 12.7. There's the $2 billion that they're looking for. $6 billion in buybacks in addition to an increase in its quarterly dividend from 3 cents to 18. Now, what do I say, right? Percentages on small numbers can be deceiving. I mean, you could say that they just jacked up their dividend by 20%, right? They went from 15 pennies to 8 pennies. It's a quarterly basis. Nonetheless, income, $13 to $15 billion in earnings for this year. They made $251 last year versus $228. And that guidance is going to rest on selling more of its largest trucks and SUVs, such as the Cadillac Escalade. Ooh, that's a beautiful one. The GMC Sierra, and a few of their EVs. Yeah, and there's that $6 billion buyback, and the quarterly dividend, now 18 cents a share. That buyback plan was in question after earlier this month they said it would take an additional charge related to the EV operations, bringing that right down to almost $8 billion. How about that? You know, it sounds like a remarkable write-down, and it is, but this company's taken in $45 billion every 90 days. They're taking in $500 million every single day, right? That's 90 days, $45 billion. So that's a 15-day write-off. That's a 15-day write-off of their revenue. $7.6 billion is a 15-day write-off of their revenue. And hey, that's half a month. 15. Okay, that's 1/24 of the year. I get it. But that's also a generational aspiration. They were attempting to transition from the combustible engine to electric vehicles, and abandoning it completely is only going to represent 15 days of revenue. Nonetheless, they had a 6.9% drop in sales last quarter on that weaker demand for EVs and cheaper models such as the Chevrolet Trax, but that's not the case, man. It's Escalades and Sierras from here on out. All right, we jump over to Boeing. Sales rise after most jet deliveries since 2018. Jump over to Boeing, and we'll take a look at them when we get back from the break. Bad ticks all over that. There's their earnings. Boeing out this morning. You're trading down by about $5 from where we were yesterday. You initially got a spike to $259. You take a look at the daily on this equity. Quite an acceleration from the lows of $180 in November. Take a look at the weekly on Boeing. So 6 months ago, we were at about 240 coming into their numbers, and here we are yet again. Boeing down by $4. We'll get into their numbers. Dow in the red. Tuesday trading. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got Boeing shares down about $4 right now in the pre-market. Now, as I said, a few bad ticks on there. There's the volatility on their numbers out this morning. Boeing down about $4. Jump around, but it's been a heck of a run. They're trying to live up to those expectations. When you trade from 176 to 254, we jump over to some of their numbers. Excuse me. So, yes, plane deliveries on the rise, okay? But they have had a half decade of operational and quality meltdowns. So comparing this and saying, boy, they're putting up numbers we haven't seen since 2018, et cetera. Well, they have a long way to go, folks. Okay? They're making 42 planes a month right now. Now, that number, it almost tripled aircraft deliveries in the final quarter. They have a backlog of planes of $682 billion. Okay, $700 billion in a backlog. These are the types of deals that get made that say, we're going to buy X amount of planes, right? All these deals with the countries that are making those types of deals as part of the trade packs, whatever's going on. Meanwhile, those deals aren't coming to fruition for like 10 years, at least. Boeing booked 336 net orders in the quarter, and they delivered 160 jets. They now have 6,100 aircraft on their backlog. They're adding planes, though. So imagine, they're pumping out 42 a month in the quarter, okay? Deliveries, 160 jets over 90 days, right? 160 jets over 90 days. Let's just say they bump it to 180 jets. Okay? That would be doing a jet, 2 jets every day. You're talking about 10 to 15 years, easy. Nonetheless, production is rising, but no faster than expected, though meeting expectations is a significant achievement. Okay, but they're not blowing it away just yet. They have a long way to go. And careful before you count those 6,100 planes as delivered. We take a look at this thing on a volume basis, on a weekly basis. You got a nice sign of strength December 1st. But the volume kind of dropped off in between. You get the 2 holiday weeks, we pick back up, and we've declined yet again. Now, you are breaking above this area, but you see July 28th, okay, their earnings from 6 months ago that I just mentioned, you were at 242. We're going to be at 245 this morning. On a weekly basis, you did 53 million shares. And what happened was we traded above that area on lighter volume. I mean, look at the weekly volume, 40 million. Let's take a look at the monthly. Well, we got today and 3 days left. From a technical standpoint, the tough part here is you are at this critical area that goes back to basically the slide from COVID. Pretty remarkable. 5-year weekly doesn't go back that far anymore. Well, you're going to need some momentum break above this area. December 2018, you got to 264. We were 248. Look at this gap we're going into. It's a lot of people that were in this equity up at 260, and you're trading down to 240 on multiple occasions, and you're finally getting break even. It's going to take some momentum to break through that area for Boeing. Jump over to NVIDIA, up by about $1. We jump over to Tesla with their numbers on Wednesday, up by about $1 as well to 436. Some of the other companies out Wednesday, Meta shares up by a couple bucks to 674 right now. We take a look at the volume on Meta. Yesterday, yeah, continuing to climb on lighter volume. Look at the drop-off. Right, you get the nice acceleration on Thursday. Friday, Monday, you drift higher, and you do it on lighter volume. Let's take all the weekly. Going into a lot of selling on Meta shares coming into their earnings, folks. All right, we keep in the earnings spectrum. UNH, revenue drop on shrinking business is what they're putting out there. We jump over to their shares. They were trading lower by 10%. And we are down below 300. Look at this. 293 from 350. You're going to be down 57 bucks on the open. Man, oh man. Where are you going to find some support in here? Right here? Maybe this bar back from their earnings 6 months ago. You get a high on this bar, a 285, and we're opening at 293 right now. We could be at the bottom of that bar in no time. 237 is that bar. Let's go to a daily. Man, so we're going to open at 293. You're right in this gap. So we're going to open right here. Well, 275 is in play. They got a lot going on. Yeah, so overall revenue for the year will be greater than $439 billion, but that is a 2% decline from 2025. And it's going to be the first annual revenue decrease for UNH since 1989. Well, if you've watched this program for long enough, man, and you've seen some of the shows I did, I'll have to pull up those articles yet again. I mean, it's basically criminal insurance fraud when you look at it, in my opinion, okay? And I'll add that as the caveat, but you read those stories that have been put out in the last year and a half, and now they're under investigations as well. They're sending their own private nurses in to diagnose people with conditions they don't have, and then getting paid by the federal government for those. And you're talking about tens of billions of dollars. Not 10 million, not 100 million, not a billion. Tens and tens and tens of billions of dollars. So, yeah. Revenue going down for UNH. You're opening at 294. We're coming back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You're looking at an S&P up by 12 points right now, up 0.2%. There's your 5-minute chart. You're up to 7,006 overnight. And right now we're trading at 69.93. NASDAQ 100 in the green, up by 0.5%, 108 points in the green. You get the Dow trading lower this morning. Now that's going to be UNH as part of that as well. You jump over to UNH down 14.9%. You catch a little bit of a bid to $2.99. And, you know, if you weren't watching the program, folks, during that time, and maybe you weren't, because, man, we're going back in time. We're going back a year and a half ago. Okay, this always blows me away. Nobody knows these stories as much as they should. If you're watching this program, all right, maybe you do. And you're definitely more likely to know this stuff because you're educating yourself on a daily basis. But it's astounding in the age of fraud being front and center, okay, and government fraud in particular, right? These insurers, man, it's straight up criminal, and you're talking about $50 billion, and this is over like a 3-year period, okay? I will share this one again in the Tiger's Den, and I'll try and throw it on YouTube. Sometimes the link is too big to throw it in the comments section of YouTube. A few things to jump into here, okay, when UNH. Now, this is talking about $50 billion from Medicare for diseases no doctors treated. The insurers are the ones who are diagnosing these conditions themselves and then billing the federal government, and they're doing it at a rate that statistically is criminal, okay? When you look at statistics and numbers and how they work, they talk about how you add, right? This is a quick graphic when you're talking about what you add to a person's diagnosis and how much you get paid for insurers. United Health members were about 15 times as likely to have that diagnosis, which is a diabetic cataract. And the reason why it's a diabetic cataract, because they get $2,800 a piece for that diagnosis. Do you know what they get for old age cataracts? Nothing. So insurers add it, and they're 15 times more likely. The government paid all Medicare insurers more than $700 million for diabetic cataracts. That diagnosis alone, almost $1 billion in 3 years. Most of those diagnoses were added by the insurers. Yeah. And guess what? UNH, okay, per 10,000 beneficiaries, they were diagnosing 631 with that condition. Every other Medicare Advantage was diagnosing 321. And the numbers are just criminal, folks. And then you go up and down the diagnoses. Okay, they would be handing out gift cards to people to allow a UNH employee or nurse to come in, diagnose them with a condition they didn't have, and bill the federal government. It is straight up fraud. And it's still nothing happened. Now you go from that one, okay, and then you have stories like this, that finally there's a criminal probe. Well, guess what? I just showed you the first article. The first article is from the middle of 2024. Finally, we get articles in August of 2025. There's a criminal probe, okay? But keep that one in mind as you look at that company in particular, because don't understand $50 billion, and you look at the numbers, we're about statistics, right? We're about statistics. Do you think they're doing business in good faith? It's a criminal enterprise when you're talking about, folks, billing people with a 15 times likelihood that they have conditions versus the regular population. That's not a simple error, okay? There's errors that you get fined for, but if you're purposely manipulating data to defraud the federal government out of taxpayer money, which is UNH is doing, you don't have to look at more than those straight-out statistics. It blows me away that somehow, executives, you look at those statistics, somebody should say, hey, you sure these diagnoses are correct? Seems like we're way over the population standard of these diagnoses, and we're billing the federal government for this. Yeah, not what's happening. All right, I'll get off that soapbox. Blows me away. $50 billion. Doesn't get talked about at all. Talking about things at all. All right, let's check in on those companies with their numbers. You jump over to GM. Up by 5%. I saw you chatting about it in the Tiger's Den. I would disagree that nobody talks about that. The auto bailout, folks, I'm old enough to remember that the auto bailout got talked about practically for like a decade. Plus, we had many people writing editorials whether we should have bailed them out because it happened under Obama. Mitt Romney famously made an epic editorial why we should not have bailed them out and let them fail. It was about $50 billion. And they got back something like $40 billion of that, so maybe it was $10 billion that was lost. the number of jobs in that industry alone that got saved over that simple investment, I don't understand. But it was talked about incessantly. The auto bailout. Like, nobody talked about the auto bailout. I don't understand. It was all anybody talked about for a long time. And yeah, where's Doge on UNH? Well, $50 billion. You want to talk about fraud, folks? You want to talk about an area to save it? Okay. They're diagnosing people at 15 times the rate of the population. It's straight out criminal. You look at the numbers. I don't need anything else. People don't. And then, anyway, for what it's worth. Okay, we jump around to some of the other equities. Boeing shares down 1.2% so far this morning. All right, let's jump around to metals. You jump over to gold. Let's take a look at the volume. And gold, silver, platinum. Quite the day of gold volatility as well. 421,000 contracts. That's the most volume we've done since the October highs. And you did it with some selling, but you did finish higher. We jump back to the weekly. We'll see if gold can hold on to these gains. We're going to have a big week of volume. It's only Tuesday. And we're going to have a big week of volume. We're at 575,000 contracts so far. All right, jump over to silver. Yeah, that was at the same time. And JK and the Den saying it's cash for clunkers. They called it. Wasn't it about the same time? And it was, because that was you know, the financial crisis and the meltdown. And you had the auto companies going BK, and you had everybody going BK, right? And so you were trying to stimulate the economy. Cash for clunkers was part of it. And I actually remember that I had this beautiful car at the time that I loved. I was young. I was 28, my late 20s, and I had a Ford Explorer Sport. Okay, Ford Explorer Sport. Loved it, but it was getting old at the time. It was considered a clunker, whatever that diagnosis was. And you had to have insurance, active insurance, because they didn't want people taking old cars off of their lawn and trading it in. Right. So they said you had to have continuous insurance for like 2 years or something like that. And it was a good rule, meant to make sure people just weren't taking cars that really weren't running cars. This was meant to take your old car you're using and buy a new car, not give you a big write-off credit because you had a old car you never intended to use sitting on your lawn that was uninsured. And what had happened was, being a young man in my early 20s, I let my car insurance lapse for a day, which you should never do. Okay, and I would never do now with a little bit more maturity under my belt. But when you're in your 20s, folks, you're living, for whatever, right? Detail. And so, unfortunately, I got all the way through a deal. I was thinking about trading in, and they said, at the end of it, I said, oh, my goodness, you're kidding me. I let my insurance lapse for a day because I was a fool and wasn't paying my bills on time for no reason other than lack of attention to detail and yeah, it didn't happen. But I remember it well because I was sitting in that dealership, cash for clunkers. All right. Back to equities. We jump over to GM, trading higher, up by 5.6. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, welcome back. We jump over to UNH, so they're out with their numbers. And, yeah, we got a lot going, whether you're talking about tariffs. And look at this. We're dropping again to 283, so you take a look at the journal out here, okay? And so Trump wants to hold Medicare rates flat next year. Well, I guess that's one way to do it. So, yeah, we'll jump around, but you got Humana, UNH, CVS. The plan... And that's the plan, is that the Centers for Medicare and Medicaid are going to hold payment rates to an average 0.09% increase next year, far below what the companies and the Journal and Wall Street, had expected. Well, maybe we'll have to trim some of those bogus diagnoses we're paying for. Can't help but be a bit sarcastic when you look at those numbers. $50 billion, right? And that's the proposal last night. Steady rates, Medicare pays insurers. The proposal aims to improve payment accuracy and ensure Medicare insurers have stable reimbursement. It's worth around $700 million, that 0.09% increase. Imagine that. 0.09% is worth almost $700 million bucks. They were thinking it was going to go 4 to 6%. How about 0.09? Amazing. $4.97 was what they were looking for. Man. Okay, nonetheless, insurance companies under pressure. UNH down 19%. You don't think there's risks around in this market? Woo-wee. You better believe it. Humana down 21%. Wow. Okay. Look at this. So we got a low last year at 206. We're at 207.32. Let's take a look at the monthly. Boy, oh boy. I mean, folks, you look at this chart. Going down to 184 to test the lows out here. I mean, we are right now coming into the lows of October of 2024, and we're breaking below those lows. Now, you're not doing it with volume. That's your monthly. We're not going to do it with volume. No, not even close. Let's look at the weekly. This is Humana again. Yeah, you're not going to break below those with volume. But boy, on a monthly perspective, man, you know, our man Basil Chapman's coming up next. He talks about symmetrical formations, which I love, right? This thing's got a symmetrical formation that, you know, it's on the way down at the same way it went up. And everything should be on the table when you talk about healthcare. You know, Republicans want a better plan. I would love to see a comprehensive plan. You know, slam it to the insurance companies for sure. It's not out there just yet. And yes, that's one way to do it, to have government just regulate the prices, but that's not a long-term plan. You can't just tell them to never raise their prices and the government saves money. So we'll see how the details play out into that. But yeah, everything should be on the table. And maybe we shouldn't be letting them diagnose their own diagnoses that we're paying out. That's it. I mean, we pay out our tax dollars. That's our tax dollars, $50 billion anyway. All right, so tomorrow we get a Fed decision. And yeah, I would argue that the market's not pricing in enough cuts for the next year, folks. I've been making that case, and when you look at where the market is right now, Fed set to pause rate cuts with no clear path to resuming. Well, Powell's only got 3 meetings. One of them's tomorrow. He's out in May. The new Fed chair will get their first meeting in June. Okay, and right now the market's looking for 1 to 2 cuts. Economists are looking potentially for 2 cuts. The overnight rate of growth right now is 3.5 to 3.75%, okay? And 12 of the 19 officials in December projected that at least one more rate cut would be appropriate this year, at least. Yeah, but the December cut drew dissents from 2 officials that said no more. And yeah, really what's happening is you're much closer to the neutral rate. Underlying inflation trend is already near 2%, but others focus on the official number, right, which is closer to 3. Their overnight lending rates at 3.5 to 3.75%. And yeah, we'll see where we go for there. Get talking to that Google phone, Jimmy. Get talking. Yeah, it is pretty wild. It's happened to me as well a couple times, right? We need some precautions on when things start opening up. I was having a conversation with my son the other day, and I realized that I just left like a text chain open and the microphone button was hit, and it was recording my entire conversation with my son in the text channel. I'm sure that's happened to you a couple times, let alone, right? We have, you know, the other day my thermostat started talking to me. You like that one? The thermostat in my house started talking to me for no reason, telling me it couldn't do whatever I wanted it to do because it wasn't connected as well as it needed to be to the internet. At first I thought it was Alexa. It was my thermostat. So I'm not talking to you, man. Stop listening to me. All right. That's a perfect segue to Apple. Look at Apple. All right. Catching a bid yesterday. A nice pop with some volume, but you're coming into these numbers that you had tremendous selling. You know, a week ago, 8 days ago. Apple shares right now catching a little bit of a pop. You got to smarten up those appliances. And smarten them up, baby. Get some computer chips in there. Get some AI in there. Everything's going to be talking to you. Hey, interesting times as we approach. You know what I often say? So imagine this one. And this is where, you know, technology is advancing. Yet it's going to take longer than you think for everything to be so transformational. There's certain things that we could be doing right now that are so easy, right? If AI was going to solve every generational problem that we've had or whatever, you know, all this stuff, and people are getting laid off, it's real. Even this morning, we got layoffs, okay? AI in focus, etc. And think about this, stoplights, okay? Stoplights. It's like the simplest function in the world. We've all sat at a stoplight when there's nobody around, right? And you're just waiting for it to turn green, or maybe you're in the left-hand turn lane waiting for that to turn green. Overnight, you'd have to replace all the stoplights, right? That's a monumental task. It's the quickest thing in the world. If you just had smart stoplights that would just be able to see where cars are, and you're not even risking, you know, worst case scenario, right? It gives you a short green light. Right? Or give somebody a short red light when they didn't really deserve it. Maybe there were other cars on there. That would transform productivity, you think about the amount of time that we all sit at stoplights that you don't have to. It's just one of those things. Then you look at autocorrect, how bad autocorrect is. Okay, there's certain things that are just so simple if technology was so brilliant, and even now still it takes some time. So yeah, we're changing. Technology's coming, but it's going to take a little while. Apple up 2% with some strength today. We'll take a look at the heat map. Let's see what's moving in that heat map when we get back, folks. Stay tuned. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at that heat map. The S&P 500, it's the tech companies. Okay, you got some of the industrials higher as well, utility stocks higher. Okay, you jump over to healthcare. We talked about whether it's UNH, okay, Elevance Health, some of these other, Humana, down 21%. The insurance companies getting clobbered. CVS down 10% this morning. Some of the tech companies, you got Oracle off 3.3%, but Microsoft, Apple, Google, look at Micron. We got Lam Research with their earnings out this week as well. LRCX up 5.3%. And let's take a look at Palantir for one of our Tigers, Duncan Steve in the den. So you're down 0.2% today. Okay, we take a look at this thing. First, we'll go to the monthly. Wow, let's go to look at the volume drop off. Okay, and we got some selling in November, nothing compared to the beginning of the year, but that's your monthly. Okay, now that bar that we're looking at there in blue, that's your weekly. Okay, look at the volume drop off. And where's your acceleration? We sold off from the highs. That's a weekly. Okay, November 3rd, 430 million shares on their earnings a quarter ago. And listen, it's a great stock, but you're coming into a valuation where you just went from $20 up to 200 in the span of a year. That's the one that's tough here. In a volume perspective, man, yeah, I don't like the action. I just don't like the action, man. You got a lot of selling. You don't got a lot of buying. That's it. You know, where's the buying after this selling, right? You get the sell-off from the highs, okay, and maybe you got to go back and test those highs before you sell off again. I could see that argument, and that might be real. But when I see an equity trading higher for a complete year and over the entirety of the year, the volume's dropping off, and it's not a story that the company's going away. But this thing's got to come into the valuation. You're just not there. That's your weekly. You look at the daily. Again, you got selling. January 16th, you got selling. You got selling down at the lows. Look how you rise on volume. There was the sign of strength from December 19th. But if you remember, that was options expiration, and many equities had tremendous volume on that day. I'd be careful with that one, Steve. You know, listen, it's been a high flyer. Defense stocks, hey, Booz Allen getting all their deals, canceled, right? There's a complete shakeup, and Palantir is going to be one of the benefitters of that, or benefactors, but be careful of that valuation. Hey, markets, S&P above 7,000. Folks, we got live grow programming. Basil's up next. Steve Rhodes live